Good morning, traders. It's 8 a.m. Chicago time, 9 a.m. Eastern. On the last day of May, it is May 31st, 2017, another month behind us. So it is Wednesday, hump day. Yesterday was another very slow day. There's a little bit to talk about here, so let's get through it real quick. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market condition right now, just recently the equity indices took a rise up from balance from where we were yesterday. It's important to note that until about 5 a.m. this morning, the market traded right around the closing print at about 2411 in the S&P 500. Those of you who write in and ask, why am I always talking about the S&P 500 minis? Why am I not covering bonds, notes, crude oil, Russell, NASDAQ? The reason is that it is by far the most popular product on the planet when it comes to futures by volume, and it has the highest number of participants in the audience that I'm addressing, and that is why. Also, if I start covering other products, this supposedly 15-minute trader bite will turn into an hour and a half long, and frankly, I just don't have the interest to spend the time doing market scans and so on. There are radio shows and other chat rooms and things that do that. I am focused on a very specific aspect, and that is the contextual planning and execution, which is where I believe, we make or lose money. I'm not trying to be an analyst, okay? So my analysis or my view is always going to be limited to the S&P 500 for now, because it is a driver for a lot of the uh, for pretty much every index sector around the planet once the S&P 500 opens. So this is why. But overall, the entire session last night was spent against the prior day's close and settlement until 5 a.m. Central Time. Um, at 4 a.m. Central, we got the Eurozone May Business Climate Indicator, which came in a little bit short at zero point 0.9 versus 1.11. Consumer confidence came in line at negative 3.3. And then the market took a big rise from there about an hour from there. So I'm not really sure what drove that movement. It seems like crude oil continues its drop. It is pushing lows. Crude is trading at 48.33. Crude is the laggard today. It's down $1.31, down 2.64%. The leader today is the DAX, followed by the Euro Stoxx 50. So the European markets are very strong, followed by the Nasdaq, Russell, and the S&P Minis. The Treasuries are hovering around unchanged. U.S. Treasury bond is down one tick. The Bund is down 5 ticks, and the 10-year is down, looks like 1.5 ticks or so. So that's where we stand currently. The main news that came out overnight really circles around the Chinese economy. Now, understand that the Chinese economy is experiencing a crazy, although we don't hear much about it, but they're experiencing a crazy credit or debt bubble. There are banks who have put out loans against collateral that never existed. There's a lot of fraud going on over there that's being detected. So keep an eye on China. I think it's definitely something that could drive the global trading once that bubble bursts, and it's very much likely to do so. China's manufacturing PMI held at 51.2 in May. Non-manufacturing jumped to 54.5. Both numbers remain in expansion because they're above 50. Okay, the UK Parliament is still hung, according to the most recent polls, as far as which way it's likely to go. The election is on June 8th. It's a week from next Thursday. So it's next Thursday. Just keep an eye on that. It'll be rollover day too as well, I think. Eurozone CPI slowed down. The Eurozone CPI went up 1.4% year over year in May, down from 1.9% year over year in April. And that's about it. There's discussion that the U.S. administration, executive administration, is looking to withdraw from the Paris Accord for climate change. That's not affecting us much, but there's a lot of just a lot of noise coming from that. As far as what we're expecting going into the session today, what's remaining, we're looking at Chicago PMI. We're looking at Chicago PMI at 945. Remember, this is a subscriber number. Usually comes out at about 941 to 942 Eastern U.S. time, and then released to the public at 945. Expecting 57.0 for May. This number usually moves us. At 10 a.m. Eastern today, we get U.S. pending home sales 0.5% for April. Okay, and as far as speakers, we're pretty clear up to the Fed Reserve Beige Book, which is at 2 p.m. Eastern today, 2 p.m. Eastern for Fed's Beige Book. So let's take a look at what we expected to see happen yesterday. Here's what we've got. Okay, we've got yesterday we were opening below the prior day's range. The expectation was for responsive buying up towards 24.1350 and 24.14. Hypo 1 is looking to get tangled in the 24.14 area and then to finish around 24.12. In the 24.12 area, this hypo was dead nuts on. It was completely spot on. I'll show you that in a second here. So here's what the hypo looks like. Here's what the market actually looked like yesterday. There's the responsive rotation, open auction. Then we get a responsive rotation up to 24.1350 on the dot. You see the number right there. Pulls back, goes to 24.1450. Remember the other number is 24.14, which was the prior day's point of control, which has very high kurtosis. And then the market ends up closing at 24.11 right there, right where the OS high is. 24.11. OS high is 24.1050, 24.11. So it went exactly as expected. Pretty dead day. Here it is, push up to 24.1350, pull back, push to 24.14. It went to 14.50 and finished somewhere around 24.12. So that was spot on. The secondary hypothesis was expected to be initiative after a test up. The reason for that is a 2-day consolidation and a pretty tight value area, pretty high kurtosis around the point of control right there. So the expectation is the market might push up towards balance and then reject it and move into the gap zone. The gap zone mid is at 24.05. That did not happen, but I'm going to tell you that today, the way things are setting up, I would expect, even though you may have been paid to be stubborn for the last 2 days or so, Friday and yesterday, because it isn't going anywhere. We have spent the last 2 days, believe it or not, this hasn't occurred in a long time. We've spent 2 days in a row where the overnight statistic was not taken out. In other words, we have spent 2 days where the day session, the pit session, never touched or breached the overnight high or low 2 days in a row. It is extremely, extremely wound up. And so, in my opinion, as I push this microcomposite forward, keep an eye on the left here on this profile and how it's forming to see where the volume's going. And you can see the volume's still consolidating the value area. Look at this value area. The value area is wider, right? It's about 24.15 down to about 24.13 or 24.12 and a half. And as I add more volume, you'll see it start to constrict. There it is. It's constricting right here. You see it constricting. There's less and less room, or less and less range for that value area with very high kurtosis. Value areas very tight with very high kurtosis. This is a really wound up market. Now, the volume hasn't been so great. Um, the volume has been somewhat short of the 20-day average for the time period, but it's still high enough that there is a fair amount of trading going on. We're still getting around 800,000 to about a million contracts in a pit session every day. With the windup that it's in now, it's really, in my perspective, in my opinion, it is really wound up and is likely to push one side out. Remember, volume does not occur in futures because there is no float. Volume does not occur in futures unless two participants trade against each other. So somebody has to be long for every short, and for every short somebody has to be long, otherwise no trade occurs. So that's one of the beautiful things about futures, is it's a democratic process, so to speak. It's controlled by the participants, not the exchange. The exchange is not handling float. It's not deciding how many contracts to put out there, limiting float, and that also means that once the market moves, you will have participants who are going to be on the wrong side and helping make that move, extend that move. So if the market moves away from here, if we see any sign of any drive whatsoever, do not fade that move. It's a dangerous thing to do. The expectation is that the move will have the fuel that it's gathered over these last 3 days here, will have the fuel it needs to keep moving. So the last high is 24.1775, which was put in on Thursday. We're trading 24.1675 on the overnight high, currently 24.1575. So the all-time high is 2 points away. This is likely to push and to turn into a mini trend day up the way things are set up right now. I'm not seeing it attacking the low currently. So what about the overnight session? Here's what we've done overnight. So here's an overnight session here, right there. There's the day session, trading inside of the overnight session right there. Here's an overnight session high and low right here. There's the day session trading inside of the overnight session. Again, on Friday, it missed the overnight high by a tick. Yesterday, it missed the overnight low by a tick. Today, the overnight high shifts are trading up. So we were trading in, again, a very consolidated pattern, very balanced throughout the night, and then we broke higher and we're holding above the point of control, the mid, the VWAP, and the LVN, the overnight LVN, the key LVN. As we stand right now. So the overnight inventory is long in price and in volume. And so the expectation coming in this morning, the initial expectation is for, let's shift this over to make room. Look at how tight this trade is. I mean, this is a 60-point range on the scale that is fixed, and we are occupying just about, 10% of that, or 15% at the most for these last 3 days. Just terrible, terrible ranges. Anyway, this morning I'm expecting an open auction out of range. I'm expecting responsive. Look out for 24.14 even or 24.1450 for support. I'm expecting it to pause, and then I'm expecting it to push higher into the session. The target, the measured move target, that is, what is a measured move? A measured move is basically a way of estimating targets. It is not resistance. There cannot be resistance up here, folks. I see stuff that people are like, yeah, there's resistance at some level above where we've traded in the past. I don't know how you can identify resistance in new all-time highs. But the measured move, what it does is it takes the geometry of the prior swings, and it projects potential areas where the market might pause based on the energy in those swings. Okay, it's really a mathematical thing. It has no basis in the auction, but it does provide some guidance as to what areas I'd like to peel off. Some contracts. If I were long into those areas, I would peel off some contracts. Doesn't always obey it, but in the past, if you had the flex levels, the prior measured moves down below, you could see us we could see us stop, turn, and at least on the first touch, stop, turn, and pull back. It doesn't really mean anything. It's not predictive of anything, but they are just extensions of prior moves. Okay. So that's hypo 1, and we're looking for 24.1950 as the first target, and then 24.25 as the next key area to test. The main pressure on hypo 1 is initiative. The reason it's initiative instead of responsive, as I said, is the build up beneath us. We're leaving our balance beneath us, and this balance is likely to fuel this push up. Okay, the hypo 2 is going to be the opposite tact in the option. In the auction process, the hypo 2 is going to look to continue the move higher from the overnight, find resistance, and be responsive initially, pulling back to 24.1350, which again is the MC point of control, potentially pushing to 24.11, and then the value area from yesterday, and then getting stuck in here for the rest of the session. Remember, it is the last day of the month. Okay, so I want to remind you, on the last day of the month, there's a little bit of, it's not as intense as the last day of the quarter. There's a little bit of window dressing, so look for a directional move potentially on the close. You heard it here. It's a warning. Look for a directional move on the close. Do not fade the closing move is my advice on the last day of the month, and definitely not on the last day of the quarter, and absolutely not on any day where the index is being adjusted. If the S&P comes in and adjusts the components of the S&P 500 or adjust the components of the NASDAQ or whatever, do not fade those moves. Those tend to be directional. Okay, so same thing for the end of the month with less intensity. The quarter, it's a little more intense, and then in general, when major components are being when components of the underlying equities are being taken in and out, it causes a revaluation because the actual capitalization and weighting of the index changes, and prices will likely adjust to compensate for that. So those are your two main ideas today. Hypo 3 for me was a drive lower, just basically taking out the late longs and causing a long liquidation into 24.05, and then a push down to 2400 and 23.9875. I won't draw it on here, but you have it. Next week on Tuesday, I'm doing a convergence event, a trader spotlight after the close at 4:30 Eastern. We're going to go over the charting package that I use here called Linsoft's IRT. We're going to go over the latest developments there, statistics, and so on. It's going to be really good. And then next Wednesday, there's a public AMA that I'm doing for Futures IO. Public AMAs are not intended for those who've been following for a long time. They're intended for people who are just joining and are confused about some of the things I talk about. So that's who it's intended for, but everybody's invited. Those will be, look for invitations and recordings in the description of the video and also on my Twitter feed. Good luck. Take care.